All right, everyone. It's about 2:30 here, New York time, and it's been a while since I've posted a bear update for Bitcoin, so that's what I'm going to do today. We didn't get the number of votes required on Twitter by our marketing people to do my weekly update last week, so I did that just for the members. But also, I wanted to announce a change. I'm going to keep these within 15 minutes going forward. Based on some of the comments I've read in the sections and feedback I've gotten, maybe the videos I was making were too long, although quite honestly I can't understand why people would be concerned about free education being too long. But as a result of that, I will need to have the charts already prepared, and we'll be talking very quickly over my points. So I'll try to contain it to really just thought pieces more than analysis. Obviously, it'll be thought around analysis, but I won't be actually doing the analysis live. I'd rather I'll be pointing to analysis I've already done to explain my conclusions. So, in the interest of time, once again, let's start at a high time frame to figure out what's going on, because we got some good information from the market as the last two pivots got put in. So before I go and try to analyze from the Elliott perspective what's going on, which I'll do last here, I want to reiterate my point that Elliott alone, I think, is a weak tool. It's something that, when combined with other forms of TA that are complementary, can have powerful results. But in isolation, in my opinion, it is a little bit too subjective to give you a good trading strategy in isolation in markets like these, where wave shapes are low probability, retracements levels are low probability. It's very difficult to get a read on what's corrective and what's motive, etc. Right? So I think that starting with more fundamental geometry-based, market internals-based analysis to give you an orientation of where trend might be headed before you dive into the specifics of account, I think that's prudent advice, and that's certainly the way I've approached this market. One of the indicators we love to use at Trade Devils is a set of EMAs, or exponential moving averages, called the Vegas waves. The way that we use it is we set up orange for the lowest time frame, the 144 EMA, blue for the middle time frame, which is the 169 EMA, and then red for the longest time frame, which is the 244 EMA. And this is a momentum indicator that, or a trend indicator that has served a lot of people very well. It's something that some people have used quite successfully with nothing else, exclusively. I don't recommend that. I think moving averages, and whether EMA or SMA, tend to only work in strongly trending markets. But nevertheless, at the one-day time frame, you are looking at the trend at the highest degree, or probably at the cycle degree. So what the Vegas waves say at this degree are quite important, and I want to share with you an observation I made, which is that there's been only 3 crossovers since the beginning of the 2014 correction in Bitcoin. One occurred about halfway through, and a death cross, where the lower time frame EMAs crossed the higher time frame downwards. A very bearish signal that signals that a negative or downward trend has been in progress and is accelerating. Right? We got that about around here. Then, after the correction ended, somewhere around here, we got a bullish crossover, or a golden cross, where the smaller time frame EMAs crossed the higher time frame EMA. Okay, that cross, believe it or not, persisted for nearly $20,000. This is about $300 it was, or $280 or whatever it was, and it lasted all the way up until the 20K peak, and finally we got another crossover relatively recently at around $7,600 to $7,700. We'll analyze that in a second, but let me put price back on here so you can see it with price. So as you can see, these Vegas waves have been very good at telling you after a trend has begun that you're in that trend. But once you're in that trend, especially on the daily time frame, you're not about to end that trend anytime soon. That's the point of this first piece of analysis. This is the beginning of the correction all the way to its price extreme low, and you could see that the bear cross or the death cross happened right literally in the middle of the correction in 2014. Then you had the golden cross that lasted quite some time and was an exhilarating ride upwards, but then if you zoom into the smaller time frame or zoom into the same time frame but expand the x-axis, you could see this death cross happened relatively recently. And what does that mean? Well, if history is going to repeat itself, then we're likely not anywhere near the end of the correction, because right now the halfway mark would be here if the correction is complete, which obviously it's not. And so if 2014 is a fractal of what's going on here, or some kind of proxy for what might be happening, and if this marks the halfway mark of the correction, then you could see that we're going to be correcting certainly through the end of this year and well into 2019 as well, which I believe is likely, not just because the Vegas waves tell me, but I think that the market needs to go through another period of substantial range expansion before the correction's over. So let me explain what that means. I've been involved in markets, a lot of years, over 2 decades, looking at a lot of different asset classes, and one of the realities that is just, to me, irrefutable is the notion that price will go through cycles of price range expansion followed by price range contraction followed by price range expansion again. They alternate, right? And what I mean by price range expansion can be illustrated best with a series of squares. Or actually, let me just use this measurement tool here. So in 51 days since the beginning of the correction, we covered, pretty close to $14,000 of price. Since then, in 219 days, we've only covered less than half that, $6,098 or 99 bucks, right? And moreover, because the range has been compressing in triangular wedge-like fashion, the more recent compression takes the price span to only 1,600 bucks, right? So if I'm right that price alternates between periods of range expansion, as we see here, and periods of range contraction, as we see here, well, there's not a lot more to contract. And so soon, we're going to see another period of price range expansion. And the question is that up or down? Well, the Vegas waves certainly suggest it's going to be down. And if it's up, my opinion is that it's likely going to be up as a part of the overall correction, not to end it. Aside from the Vegas waves, I just don't see enough evidence with market internals, with the volume, any of the oscillators at the highest degree, like the daily. I don't see evidence that we're about to end a correction, which, if this is, as some have it, the final leg down before an explosive move up, well, there's zero evidence of that anywhere that I could see. We already discussed about one of the fundamental tenets of my belief around technical analysis, which is that price alternates between periods of range compression and range expansion. It's not something I created. It's an observation many have made, but it's one of the things that I've really embraced as core to my strategy. And I use different trading strategies, different approaches, look for different setups, and manage my risk differently in periods of range expansion than I do in periods of range compression. The members get the full detail on that, but if you know what I mean by what I just said, then you will also give yourself a huge leg up on the competition, because most people don't differentiate between the two, and that's a big mistake as a trader. Another observation, certainly not mine alone, is that the market and price moves in a manner that can be explained through simple geometry. And if you can't figure out the geometry to a particular chart, it's not because it's not there, it's because you haven't figured it out. Part of the challenge of technical analysis is, much like solving a puzzle, you have different tools available to you, and you have to adjust and calibrate the chart different ways and look at it in different scales, like log or not, different time frames, etc., to arrive at a geometry that explains what's going on with price. And one of my favorite tools to use for that is W.D. Gann's Gann square. I affectionately call him Willie G. So Willie G has been a fantastic predictor for Bitcoin. Here is my calibration of his Gann square. I've fixed it here on the y-axis, so as I move it around, the calibration will remain. But just take a gander at this. It's incredible how a series of mathematical relationships applied to different shapes like lines, squares, and arcs has nailed Bitcoin to this degree. If you look at the all-important 45-degree angle of the Gann square, the foundational mathematical relationship, it cleanly shaves off the sharp half of the correction from the sideways fuckery. If you look at the adjacent lines for this Gann fan, they capture similar wave sequences in their entirety. You can see this one very sharp, covered by this line and this line. Then the next sharpest, this line and this line, and then this one by this one and this one. The arcs are self-explanatory. Look at how precisely they've managed to capture key moments in the correction. Support here, resistance here, not once but twice, and then price has fallen right to the next set of arcs. And these two arcs have contained, hugged this entire corrective structure. Very impressive. And then this 45-degree line has acted as support all the way through until the next set of arcs has captured, once again, with great precision, each key pivot in this upward move and this downward move. Also, the square lines have had an impact. You can see this vertical line and this vertical line have come at key moments in the correction. This one almost smacked Bitcoin right down to here before there's a final little push up, and then this big sequence began. And this one almost nailed to the exact hour the drop in Bitcoin recently. So those of you guys remembers that have seen this will recall that this chart was established right around here, way before all this happened, and I haven't adjusted it. It's been a great predictor for Bitcoin. And one of the things that one of the points I want to make is that the structural support afforded by this, at least this particular geometrical tool, is nowhere to be found. No man's land. You know, we don't expect any support until this arc level. Now, of course, you could draw the Gann square and pull Willie G out here, 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 and you'll find that. But at this level, at this degree, at the 3-hour time frame, there's not a lot there. And another way to look at it is, of course, VPVR, to look at transactional history. Let me slap that out. And boom. We're very, very close to ending the period of natural support. Not only from this entire correction, but the big pump up leading to it. You know, we have to go down to $3,500 to begin to find some lines here in the VPVR. You know, maybe scan even further out. Looks like the next major level of support occurred at, you know, maybe around $4,200 around here. So we're at a point now where, if my theory that price alternates between periods of range expansion and range contraction is true, we might have begun the range expansion already with this big sharp move that recorded the biggest 1-hour drop, or the biggest 1-hour volume in BitMEX history to initiate this downward move. If we break this trend line here, which I fully expect will happen, man, it's going to be a very short ride to the bottom floor from whichever level this is, 5,900 or so. It's going to be, multi-$1,000 move potentially, maybe at least a few hundred, but maybe 1,000, maybe more. And to save Bitcoin from that fate, there's just not a lot of support. Not a support. And tons of resistance. There's obviously this trend line here that's been, crushing Bitcoin downwards throughout this entire move from its $11,800 high or so here. But then there's all types of structural resistance from this line, as well as some of the other Fibonacci-based geometry tools I've pulled out in the past. For example, these fib arcs. Let's see if I can... you can see how significant they've been. I mean, they've nailed, or come close to nailing, very important parts of the correction. No surprise, since I've already calibrated the chart geometrically with Willie G. But there's some resistance coming up here and here with this line. And then there's all types of other tools I've used in the past to make that point also, fib channels, etc. There's also the important point that there's a ton of algo targets now. I mean, you can pick your pivot, right, to figure out which algo target you choose, depending on how bearish you want to be. But I mean, I've done this before, so I'll do it very quickly. But from this pivot to this pivot is the only significant halfway back trend line, or fib pull setup, and the minus 236 of that is $3,200. You can do any of these pivots. They've all hit the 618, 65% golden pocket from here. I've done this before too. Here to here, golden pocket hit, minus 236 is at $5,200. Then you've got minus 382 and 618 confluent with the 3,200 at $3,200 here. Then you've got next pull here, golden pocket hit once again between the 618 and the 65%. And lastly, this one, the newest pivot, same thing. Whoops, I'd pull it off of, this one right here. Sorry, I did it backwards. From here to here. And you got a 618 hit almost to the tick, and before this big sharp drop off, right? So yes, there's a lot of, I mean, there's an algo party below $5,000 here. Look at all these different levels, right? Which pull are you leaning on if you're counting on the next move to be up? There isn't one. Literally zero. There are none. There's no golden pocket or 50% halfway back algo play in anything here in this entire correction. So if you want to make the argument that there's algos that are going to trade this up, well, from what level to what level? The only hope you had was this one here, but it's already well below the golden pocket. Let's see. I'm doing these backwards today because I'm zoomed out so much. Yeah, you're already well below the golden pocket, way past it. I think you might even tap to 786 already. So how price is going to go up from here, beyond me, but I'm certainly not betting on that one. All right, in the interest of speed, let's go right to the Elliott counts here. This is a count that I think is very possible now. We discussed this many times in the past as I think while we were on this wave here and this wave here, but it became less clear as this got put in because this looks so impulsive, but it turns out, well, I guess it could still be an impulse, but it could also now be some kind of WXY or very sharp zigzag correction, and much like this one but in reverse. So if that's true, then we could have a situation where we have a W, a zigzag, an X that's a triangle, and then a Y to initiate that period of range expansion that I talked about. And maybe this is the thrust It certainly looks like it from the volume that's accumulating here. And again, we're on the 3-hour time frame, so you got to give it a couple more days for the full volume spikes to show, but it's already looking quite spiky and very much like a possible thrust out of a triangle. If you go to coinmarketcap.com, which is here, actually let me move it to 2018. You could see this is all the accumulated exchange volumes. It's a better measure than any exchange you choose on your trading software, but you can start to see the spike already for a potential thrust here. So one option that we have is a double zigzag where the A, B, C that ensues has begun here, and this is the one of the A of the Y in progress. And finally, another option that we discussed was the triple zigzag. I think it achieves very much the same result, so it's a matter of semantics. It's going down a bunch, and the question is how you label the wave shapes. But this one would have the initial zigzag as the W, zigzag X, zigzag Y, zigzag X, and then a final zigzag Z, A, B, and then we're putting in a 5-wave impulse down to put the C in. And, well, let me actually add one more measurement here. And any of these high probability landing spots for a C relative to the A off the B would make a lot of sense. You know, the range could be from 3250 to 4850 or so, give or take. So pick your flavor. I don't know that Elliott is the best way to manage your trading right now, in exclusion of other forms of TA. Obviously, it's an anchor tenet of our strategy at Trade Devils, but also important and equally important are algos and geometry and all the other tools we use. So I've shown you a couple of flavors of the type of analysis that in my opinion leads us down to a new low. I've talked a little bit about how low it could go, showed a bunch of algo targets and given you these measurements. But if it's the double zigzag with a triangle X, you can certainly expect well below 4,000, possibly into low 3,000s and even below. So that's the Beardevil Lite sub 15-minute update for today. And if you guys like the abbreviated format, let me know. If you prefer the longer with more detail and analysis, happy to do so as well. But for the members, I'll always give the full-on analysis with all the charts and explanations around trading strategy as well. So I'll see you guys next week.